Hello, hello, hello. Let's get ready to trade some options and make some money. I hope you guys had a wonderful week and are having a wonderful Sunday, lazy, relaxing Sunday. But you can only relax for so long because the market doesn't sleep. So welcome, welcome. Let's see those names in the chat. If you're from Discord, just type your username in there. I'd love to know who's here. If you're new, please just type new so that we know who you are. And we're going to be giving away some free stuff. We've been giving away some free memberships every stream. If you want to win access to the best trading platform there is that will make you money, then I would stick around and I would make sure to hit that comment button. You know what I'm saying? Type new in the chat, baby. And then as always, hit that like button. If we can get to 30 quick on the likes, and we're going to go through an extra ETF that I'm going to walk you through my options ideas for that ETF, which I think will be absolutely fantastic. For those of you that have been with us before, you know the deal. We're going to go through the SPY as always, tried and true. We're going to cover exactly what needs to happen in terms of price action, and then we're going to cover trades, both sides, bull and bear, so that you're fully prepared for anything that happens in the market. I have a couple other trades I have in mind, and we are also going to roll through our NVIDIA options trade, PayPal, PLTR, and one or two more because we have a few open trades that we've been watching, waiting, taking advantage of, making some money on. We're going to stick with those. I want to give you continual analysis so that you know exactly what the hell's going on week in, week out. The goal is to get you guys consistent on this stream. If you stick with us every week, you will be walked through those trades. You will be hand delivered the money, if you will. And at the very end, we're going to cover one small cap stock pick that I think is going to absolutely explode. My screener has been betting 89% for the last 3 years. Unbelievable results. We've been picking one every week. So far, we got 7 weeks in a row. I can't see my hands. 7 weeks in a row of a winner from that small cap screener. And I hope to deliver week number 8. How are you fine people doing? Oh, there's spider webs on this mic. Ugh. Ew. Ugh. Yuck. Yuck. We got Yolanda, Parker, My Viet, Barb, the Gata, B. Diddley, Justin, LT, Dr. Dennis Davis, double D, baby. D squared up in this moth right now. Coming hard with the questions. I love this. I love this. Dennis, are you new here? Because I haven't seen this name before. If you are, stick around. This is exactly what I love to see. Is price action the only thing you look at when trading, or do you also do technical analysis? Absolutely. Your question will absolutely be answered, my friend, on this stream. We are going to basically be detailing exactly what my strategy is, exactly what my process is, so that you guys know exactly how to trade these plays, exactly how to make money on them. When is it time to get out and take profit? When is it time to leave? It looks like we already got some spam on Facebook. Thank you, Mark Zuckerberg, obviously. I think that this week is a pivotal week. We're going to go into SPY in just a second. As always, come on, let's hit that like button. We got a 20-something people here. Let's see 20 on there, and we'll get started. It's that thumbs up. You just hit it once. Hit it twice. It doesn't feel as nice because then it goes away. Just need to hit that one time, and we will get rolling here. Let's get to 20. Everybody on this stream, contribute, throw in, help me out. We got Swinging Bull up in here. William Marquez, what's up, my friend? Again, if you're new, please type new in the chat. If you've been with us before, type your Discord username. If you're not in the Discord, you should join. That's where all the free trading education resources are, the daily alerts, and much, much more. So, once again, hit that thumbs up. We need to get that up to 20. There we go. 16. We're only 4 away. We're getting so close. Someone else join. Let's see. Just if we're at 18. My God, you guys are so good. You're so quick. It's wonderful. It feels so nice. Just two more of you lovely people. Hit that thumbs up when we get rolling. Let's hit 20 and be on our way. We're just so close. We're just so close. 2 away. 2 away from the options trades that just may buy that Lamborghini after all. Boom, there it is. I love you guys. So, let's get into it. Red or green this week? Type it in the chat. I want to know how you guys did. I want to check in so I know exactly what we need to cover so that you guys make some money this week. Were you red or were you green? Just type an R or a G in the chat. I want to see how you guys are doing. We got to check in. We got to know. We got to know. Red or green? Type an R or G in the chat. I just want to know how you guys did. Did you do well? Did you do poorly? If you did well, Was it one trade? Type that ticker. If you did bad, why? Is it one bad trade? Because if it's one bad trade, that can be fixed. If there's a lot of bad trades, I think that can also be fixed. But we need to be honest with ourselves if we are going to be good at this. Barb crushing the SPY as always. Barb, top G. Respect. William Marquez, green, baby. I love to see that. Oh, you got a professional headshot if that's really you. I love that. Whoa, Justin Damp. God, I love that F at the end, dude. That gets me every time. First week ever, all 5 days green. Boom. I wish I had one of those sirens that does the. We need more production value up in here. I don't know if you guys agree. Light green on the gator. That's good, man. You can't argue with that. You can't complain about that. Light green better than light red and even better than dark red. The bull, as always, Mr. Spread, just passively incoming. It's making that passive money day in, day out, making us all look like stooges. I love this. To see you guys filtering in, we are going to get into it. What is going to happen with the SPY? Is NVIDIA done? Is tech going to get crushed? Is the digital US dollar going to disrupt PayPal and the other digital financial services providers? These are questions that we are going to answer and more. So let's get into it. We've got the SPY here up on the chart. We are batting about, I'd say about 90% on our analysis week in, week out. We have been detailing the up and the down moves, making sure that you guys are making money. Do not be overwhelmed by this chart. We're going to clean this up a little bit. Again, we like to map it out week in, week out, and I like to leave this on the chart, so you guys understand that we have trust and transparency here, and that is king over everything, so that you can see nothing's been adjusted. And that way, hopefully, one of you screenshots it one day and says, you know what? He wasn't lying. Everything's the same as it was last week, and they nailed it. We have a very interesting week ahead because I think we are sitting at a pretty critical point here. I think this is either going to be the spring point, which when you look at a chart with this kind of volatility, up and down, up and down, up and down, that spring point is where the stock either gets loaded and then rips up, or it's not the spring point and it goes down into oblivion and we start to see some bearish movement on the SPY. We have an ascending channel here that SPY has been playing in for quite a while, up and down. We've been playing this channel very well. It has held up pretty substantially over the last couple of weeks. As you can see here, we're holding at about 412 and change. We wanted to see this hold over this line we indicated right here, 408. That's our bullish to the upside. If we didn't see that, then we are in trouble, but we did. So we have some bearish neutral action here. I don't like this inverted hammer that we saw. Again, we're on the daily, so keep in mind this was 2 days prior, business days. This was the last trading day that the market was open. This is an interesting point because we actually started to see some volume flow back in here. And as you always know, volume does precede a change in price. Let me get rid of this TTM squeeze nonsense. I was just playing around with that. You don't need a bunch of nonsense on your chart. I'm just going to say that right now. You don't need a bunch of bullshies on there. You just need a clean chart. You need to understand price action, and all you need to do is chart support and resistance. If you can do that, you will trade effectively, efficiently, and you will make money consistently. Don't let anybody tell you otherwise. If they do, they're trying to sell you a course or they just don't know what they're talking about. So I really like that we've ascended beyond range 4, as we indicated in our past streams. When we were down here, we were looking for that for bullish momentum. We wanted to see over $408 per share. When we did, then we had a slight bullish bias to the upside and have our ascending resistance, this very vibrant blue line right here. That is where we're going to see some trouble with the SPY. As you can see in the last couple of weeks, we've hit that and it's been confirmed resistance. I'll put this on so that I could draw and you guys can see, because that seems to be pretty effective, and I hope that's helpful. As you can see right here, why does it go away? Come on. Right here, and right here, it's happening again. So as we see these resistance touches occur, guys, what we need to look at is how high is price going and how harshly is it getting rejected. When it's getting harshly rejected like it is right here, if we zoom in a little bit, price just barely goes above and then gets pushed back down. That means sellers are coming in with a very strong force and or they are controlling the money. If we go then down to volume, we could see, you know what, they are controlling the money here because volume was substantially greater than the average, which is this blue line that's wiggle wobbling all along here. So when we see that happen, we go, okay, we don't have that much strength to the upside. Let's continue watching. We test again right here. We thought that bulls were starting to take back strength here. Again, look, significantly higher volume than previous trading sessions. A lot of green bars here. However, volume wasn't strong enough to continue the push upward, and or global macroeconomic news came in and destroyed it. So that's always something that can happen. It's always something to be aware of. Quick disclaimer: I'm sorry, but my voice. I had to coach my kids' football, and we had a doubleheader today, and I had to yell a lot. I almost lost my voice. And so we then sold back off. We found new support down here. I would argue that support really formed around 391 after we had this pretty scary moment right here in the 380s where we really didn't know if we were coming back up. And then we ripped back up. We saw pretty quick movement all the way to the upside, touching as high as 415 just the other day. Yet we have not tested this resistance. That is a problem for me. When we don't see another quick test on a strong move up, that's a problem. However, pause. I do believe that if we're hitting that springboard point, we are going to test that resistance soon, which means that we are going to go into this week with a bullish bias disclaimer only if the following occurs. So this is where we need to map this out. Right here, right now. I'm going to type this out. This will make it easier. This is our SPY bullish scenario for tomorrow. Price stays above. Let's get a little more granular here. We're going to switch to the 1 hour. Remember, you know this. I've said it a million times. Stick to the daily and the weekly chart. Don't go in any smaller time frame. Realistically, when you're mapping out the trade, you don't want to go much smaller than the hourly chart. We want to trade simple, consistent, and accurately in terms of our results. So here's what we have. We had price compression here, pretty much spanning between 411 and 412. We had a little bit upside, a little bit of downside, but overall, we traded pretty neutral over the last two sessions. We had a pretty strong movement up to 416 and after hours. That was back on the 18th, but we weren't able to sustain that. We came back down and pushed up here and then traded neutral again. What we want to look for is the RSI compressing? Answer, yes. That's good. It's coiling, right? We see tighter and tighter price action. We want to correlate that with tighter and tighter action on the RSI. All that's telling us is that the momentum is building to a point where it's going to release. Now, that's the question. Does it release up or down? In this scenario, if the following occurs, I think we're going to see bullish. We could maintain a bullish bias. I mean, we're not going to maintain any bias. We're going to have both trades locked and loaded. You guys are going to make money either way. That's why I wanted to do this stream, because you guys make money either way. If it goes up, you make money. If it goes down, you make money. Everybody wins. You keep coming back, and that's what makes it worth it. So we need to see support above 411. If we see a sell-off at open, we test 411. That's our opportunity to go calls on the intraday. If we break 411, the next support we're going to see is about 410. That has to hold. If that doesn't hold, we're going big boy puts, because that is our 200-day moving average, and that absolutely has to hold. I do like that we see a pretty significant rejection off support here as price is tightening, as RSI is tightening. Again, as we always talk about, we want to see the short-term RSI over the longer-term RSI. That would be, you want to see the yellow line over the green line. That's what we see right now. RSI is currently just slightly above neutral at 52. That is a good sign. We also have this little consolidation that's happening right here. So we can see, if we go back, that this little channel that I talked about just a second ago as our kind of little mini channel that we were trading within, if SPY rips, this is going to be our demand zone, and I think it's likely that we do see that. So what is a demand zone? That is where buyers. Yes, Dennis. What is your question, my friend? Demanding. I demand answers, he says. Hey, penny boys, answer my question. I'm just kidding. But what's your question specifically? I know you asked, do you use TA along with other methodologies? The answer is yes. That's what we're going through right now. But if you have a separate question, sidecar question, feel free to ask it. So what that demand zone means is that this is a place in which buyers are very willfully loading the boat. Now let's go back in time and see if that makes any sense. Answer yes. Look at this price action upside, upside, upside. Buyers are stepping in this zone that we've indicated right here in between these two horizontal lines in force, pushing price up significantly. That gives us an indication of strength, momentum, trend, everything. It's everything you need to know and more. So the question is, will it continue? We got a little head and shoulders that formed here. We sold off. We're back to the neckline. Also a good sign, in my opinion. We want to see that retracement. We don't want to see straight up. We don't want to see straight down. We want to see continuity. We want to see consistency, and we want to be able to dial in at these springboard points in which price action is going to release, right? So it's pressures building up in a pipe, and then boom, it blows up. What we need to know is, God, my nose, I need to cut my mustache. It keeps itching my nose. Oh my God, these little hairs. Have you ever had that? Those little hairs kind of like go up and they tickle just under your nose, and it's the worst feeling in the entire world. Oh, sorry for that brief interruption. My voice is cracking. I wish I had a really deep voice. You know what I mean? Like the Morgan Freeman setup. That's some good stuff. I wish I had that. That would be exceptional. There'd probably be 1,000 people on this stream. So you'd be like, wow, I just love that guy's voice. I don't even care what he says. I lost $10,000 trading his stuff, but damn if that voice isn't good. Back to our scheduled programming. ADHD, huh? So we have this little demand zone that's formed. We saw buyers come in strength 1, 2, 3, 4, 5 times, 6 times. I would even argue 7, because even though we had this kind of sideways price action, sellers didn't take the cake here. Buyers were still able to push up with pretty decent strength, and they rejected these attempts to sell below the 200-day EMA. What I love to see, love. This is very bearish right here. This is important. Pay attention to this part. This is why this is bearish. Strong move up. And look at this red candle right here. This on the hourly. The selling completely overshadows all the buying. But then buyers step back in and basically undo what sellers did right here. They basically undo it. I love that. That's good. That means that we're seeing a nice liquidity transfer. Sellers are pushing down hard, but buyers are just taking it right back up. They're accepting all that they're willing to sell, which indicates confidence, right? Again, we're just trying to look at the price action and look at the market and determine and speculate, because that's what it is. Let's be honest. Make an inference is a better way to put it. We're trying to use the method of deduction, right? If anybody likes Sherlock Holmes, what does the guy do? He just looks at these little inane details, some of them not inane, but a lot of details, right? He examines a crime scene. He meets a few people. He notices a few little particulars that are interesting. And then he eliminates all the things that it is not. So he's only left with what the highest probability outcome. That's all you do with trading. That's the beauty of this. If you can eliminate all the maybes, all the what ifs that you can confirm aren't going to make sense, and simply be left with the most likely outcome, you can plan for that outcome and you'll make money. You'll always make money. That's how I make money trading options, week in, week out. I eliminate the BS. I get rid of all the what ifs, all the I should have, I could have. I get rid of all of that. Anything that looks misleading, I can't trust it. I can't use it. It's bad data. I can only use the information that's in front of me. That's all trading is. None of us here, sorry to say it, unless there's an absolute whale in this stream that has billions, none of us are going to move this market. So we are at the behest of the market makers, right? And the institutions that move the market. Their liquidity moves the market. All we can do is try to get a readout, right? Gauge their behavior. Determine what it is they're doing. Make our plan, right? The little guy plan, which is what we are. Let's be honest. It doesn't mean we can't make a lot of money, but it's the truth. Make a little guy plan. And we can capitalize on this window of opportunity that exists, right? So if institutions are just coming in and scraping up all of this selling pressure, they're telling us, hey, we're confident that this is the right opportunity to buy. What do we do with that? Well, we trade that opportunity. Could it be misleading? Absolutely. But again, we're using a principle of deduction to eliminate the what ifs. All the things that we know this won't be, we're going to get rid of them. We're going to simply be left with the 2 or 3 most statistically probable outcomes based on what we've been able to infer. So what have we been able to infer so far? Let's to put this in real life practical example. Buyers very much so like buying in this range between 410 and 412. How do we know? Well, we saw it on the 13th. We saw it on the 14th. We saw it on the 15th, 17th. We saw it again here on the 19th. Well, we saw it again here on the 20th. And then we saw some selling. But again, buyers came right back, scooped it right back up. Look at that volume. It's like an equal trade. And then we had some pretty strong selling on the 21st, but buyers came in strong at the end of day. So if we look at this range, right? 1, 2, 3, 4, 5, 6, 7. If we look at a 7-day period in this range, buyers loved it 5 out of those 7 days. No, you even got to give them this day because we're trading above that. 6 out of 7 days, buyers had strength here. We give this example all the time. If you flip a coin, let's see, get ready, type in the chat. We're going to see who's right. We're going to see who's a statistician here. I have a coin that has 2 sides, obviously, heads or tails. Let's say I flipped 4 heads in a row. What is the statistical probability that I flip heads again the 5th time? Once again, to repeat, I have a coin, heads and tails. I flip it 4 times. I get heads 4 times in a row. What are the odds that I get heads again on that 5th coin flip? I'll wait. Got some guesses here. Looks like we have some geniuses here. I should not be drinking coffee at 8 o'clock at night. You guys are correct. The answer is 50%. How does that relate to trading? We're gonna sidestep for 1 second because it's very important. For those of you that have struggled with losses, for those of you that have struggled with the trading psychology component, which is, I would argue, the most important component of trading. What happens to traders when they're winning pretty consistently? They start to typically gain a level of confidence, sometimes an air of arrogance. I have, in which I start to think that I just win. What does that do? It starts skewing my bias. Just because I won 5 trades in a row does not mean I'm going to win the 6th. Now, if I've developed a methodology, if I have, again, we talk about having a thesis, right, of macro idea of what the market is going to do. And then we break that down into more detailed sections of how I'm going to trade that move. We can be confident because we've done the work. We've put in the time. We've done the homework to have the plan, right? At that point, this is math. This is just probabilities. We are taking the highest likelihood of success probabilities with the highest likelihood of success, right? So it makes sense to continue rolling that strategy until when? Until the outcomes don't match the expectations any longer. So if we anticipate we're going to win these 7 out of 10 trades, which would be phenomenal, but we're only winning 3 out of 10, 3 out of 10, 3 out of 10, then clearly what we've devised does not work. Just because the buyers loved this for 6 out of these 7 days doesn't mean they're going to love it for the 8th. But it does mean that the likelihood of this little window of price, right, between 412 and 410 being a demand zone, we can stand on that with I would argue, a pretty stable confidence, because it's happened so many times. It's happened enough that we just have to follow where their money goes. That's where they're voting, right? That's like that's how they're tipping their hand, is where their money goes is what they really believe, right? People invest in causes they really believe in. And in the game of money, these people are saying, I believe in upside, more than likely, or they wouldn't be buying. So what do we do with that information? Is it true? What does the Wall Street Journal say about penny boys? I would love to know. I didn't know it was featured in the Wall Street Journal. That'd be amazing. Unless they're like slandering me and they're like, this guy's an idiot. I hate this guy. This guy sucks. Get rid of this guy. He's the worst. Or do they say, why isn't this guy working at Goldman Sachs? I don't know. You tell me. You tell me, DD. Dennis Davis, I don't know. I wish we were in the Wall Street Journal. To my knowledge, we never have been, but that would be great. I have been featured in Barron's. That was a highlight. That was pretty cool. Been featured in Benzinga, also pretty cool, but not Wall Street Journal to my knowledge, but I'd love to see it. So again, there's no guarantee that they like this again in this demand zone on the 8th day, but we can reasonably assume that they have placed their bets, which means that they see something coming that we don't know because we're not going to have access to that kind of inside information. Why does Nancy Pelosi continue to just dominate the stock market? Because she's got access to insider information. Why are senators and congressmen making these unbelievable wizard trades? Like, it's almost as if they knew what was going to happen. Surprise, they did. Or they could also, with keeping their hands clean, because I'm sure most of them keep their hands clean, infer enough things from kind of backhanded comments or legislation that gets put forth. They can read the room, right? They know when something is positioned to explode or implode, right? Explode up or implode down. So I would argue that everyone's placing their bets on upside as long as we hold this 200-day moving average here. So our bullish scenario here is a breakout over 412.30. That's going to be number one. That's going to be the first thing we look for. If we get a breakout at open over 412.35, so we're going to draw this out so you guys can see it. So let's say we continue neutral and we open right here at about 412. We're going to test this. If we break out and then come back down and test and hold, I think it's very likely that we see 413.50 or so by the end of the day. That would be pretty much my bullish scenario number one. That would be the one thing I'd be looking for a very strong move to take from a day trader's perspective. The other bullish option, I think the only other way this really happens is we open really strong. We come down. You guys remember this. We've seen this move a lot on the SPY. Strong open, quick push down, a little consolidation, and then we close the day strong. So that means that our opportunity for calls lies right here at about 411 and change. If this doesn't hold, do not hold that position because we are going to come down and test this 200-day EMA. That is inevitable. If we hold that EMA, that would be our second buying opportunity, right? So for example, in this scenario, rips up, we start loading up calls down here. We go, oh, it's going to be great. I love this. It's going to be awesome. Stops get hit. Move on. Fine. Please do not fret. Don't hold it. Don't do anything else other than secure your capital by eliminating the risk off the table. What we're waiting for then is your second opportunity, which I would argue is a better long-term opportunity. So again, SPY rips strong at open. It's pushed back down. We start thinking, okay, this is to the bottom. This is where we're loading up. This is going to be good. But then it falls through. We're going to test this 200-day EMA, okay? This is our opportunity to buy swing calls, right? This is our opportunity to swing calls here. We're going to go through exactly the contracts I'm going to look at here in a minute. I just want to give you an idea on the overall thesis and strategy so you know that going into it. Again, my hope is that by the end of the next 8 weeks with you guys, we're going to dial in on this even stronger over the next 6, 7, 8 weeks. You guys are able to sit down and tell me what you anticipate will happen based on what you've learned about how the SPY moves. So if you're sticking around, that's the knowledge you're going to leave here with. In less than 8 weeks, you're going to have an education that can pay you thousands of dollars a week. If you do it right, as long as you manage risk, simple as that. It's really not that hard. As someone who makes a living teaching, trading, and teaching people how to trade, I can't possibly be dishonest with you to say enough to say it's that hard. Here's the difficulty. And I'm sure you guys already know this. I'm preaching to the choir. The difficulty is in the discipline. To know oneself, that is the real challenge. And if you don't know oneself, then, well, I hate to say it, but this is going to be very difficult for you. If you can't pinpoint, oh, here's when I'm greedy. Oh, here's when I'm, that was an ignorant trade. I shouldn't have taken that. That really was in contrast to the plan that I built. It was in contrast to my trading values, my trading morals, if you will. If you can't pinpoint those behaviors, you will never be successful at this. I'll tell you that right now. I have never met a successful trader whose emotions were wildly out of control. Not one. They weren't. I've met some unbelievable traders that are terrible people, but they know how to manage their emotions within the scope of trading. Now, you know what we're about here. So ideally, the goal here is to be good people and make good trades. That's the idea. And I don't really like the good or bad, but the point here is that if you can't understand exactly why you did what you did, it's impossible to not recreate that mistake in every trade you take. Now, how do you identify what it is you did wrong in a trade? Well, it starts, number one, self-honesty. If you can't be honest with yourself, honest enough to say, you know what, that was a bad setup. That is in direct violation of the trading plan that Dad and I worked through. I don't know why I did that. The reason I joined this group is because I lost so much money before doing exactly this, and I'm still doing it to myself. Key part there, operative word, operative sentence, doing it to myself. No one's losing your trades but you. Plain and simple. Now, the why, that's the important part. We need to dial in on exactly what it is that's leading us to these points of critical error. And most of the time, it boils down to just simple ignorance or greed. You guys know this. It's not anything new. It's not anything shocking. It's the inability to sit down and say, you know what? That trade opportunity didn't make sense, but I lost those two other trades earlier in the day. So I figured this one had to be my winner. Now, remember back to that example of flipping the coin, right? We flip it 4 times. Our odds are still 50-50 on the 5th flip. So thinking that because I lost these 2 or 3 trades, this one's got to be the winner, that line of thinking will always lose us money. We can't think that way. We can't afford to do it. So in getting back into this, that's exactly what I'm talking about here. If we get a strong open and we test the support at 411 and we think, well, I'm just going to hold because the 200-day EMA is going to hold, right? He said to watch for that. Yeah, I said to watch for that. But that's our critical test point. You don't want to hold this kind of risk from buying here all the way down to here. It makes sense to buy again a different contract down here and take a very small amount of risk in case this doesn't hold. Versus we buy here, the contracts lose 20% while we wait for a test of the 200-day EMA. That might not go our way. That means we're losing 20% plus whatever else comes off the contract after that. Is that making sense as to why that's not the move and why it's not prudent to hold through stuff like that? Just to check in with you guys, make sure you're following along because we're moving pretty quick. Does that make sense? Why managing risk in that way is the only way to trade this right now? Just a quick yes or no in the chat is all I need. Yes or no? Does that make sense? We don't want to hold from this upper point as we wait for this lower point to become support, because we're just adding additional risk we don't need to take on, which just significantly diminishes our profit potential, but also increases risk threshold. So we're putting ourselves in a box where we have to win twice as much just to not lose, if that makes sense. That risk-reward ratio is essential. You have to know exactly what you're willing to risk and exactly what you're going to make in every trade. That's the idea, is that we know that in every single trade. We know exactly what we're going to risk. We know exactly what we're going to make. So in this example, SPY pushes up and tests right here at 412, right? Comes down, tests. I would argue that this is like our kind of placeholder support, potential support, secondary support. It tests 411.30, right? And we say, you know what? This could be a great opportunity for intraday calls. I do believe it is. However, if it doesn't hold, the losses we're going to take while we wait for it to test this 200-day EMA basically ensure that we're going to have to see a move. We're going to have to see a way bigger move to even offset those losses. So even if SPY bounces up neutral, right? So let's map out a different movement here. given this scenario. So opens neutral. Oh, sorry. Opens neutral, strong tested open to 412.35, right? Comes down. Okay, we got our first little support here. This is good. Let's load up on intraday calls. And then comes down and tests the 200-day EMA. You don't want to be the guy saying, you know what, it could hold. I'm just going to hold on, because in that little space, like in this area right here, guys, in just that move right here, you could have lost 20, 30% just while you came down and waited for that test of the 200-day. You don't want to do that, because then you're going to feel like you're winning if it gets a shallow, weak bounce back up to this support. Let's say it becomes resistance, right? Shallow bounce up. Now you're almost break even and you're like, oh, it's going to be fine. But then what happens if it comes back down to test support again? Now you've tied up your money all day waiting for a what if. You're red on the trade. And at this point, it's cut losses now, not wait. It's the most inefficient way to manage money in that sense, because money's tied up all day, other trade opportunities ignored. You're stressed. Quality of life is something nobody talks about with trading. If you are having an ulcer while you're trading, then clearly something isn't right. Either it's too much time, the strategy isn't efficient enough, and you're not making money, right? And the stress of simply doing it outweighs the good of doing it, right? Even if you're making a couple $100 a day, in my opinion, if you're miserable staring at a screen, isolated from the people you care about and yourself, that's no way to live. We want balance, baby. We want that balance. We want that sweet stuff. That's why we're mapping this out ahead of time, so you can take these easy breezy trades. Oh yeah, we mapped that level out. It's bearish over this, bearish under this, bullish over this. Here are the different contracts to look at. So this is all mapped out. So at that point, it's just a yes or a no. There's no emotion involved. So in this scenario, you don't want to be that guy buying hold and then, oh, it's coming back, and then it comes back down, and then you want to you want to punch yourself in the face. That's where revenge trading comes in. I know a lot of you probably have experienced that. Revenge trading is a very common theme. I've done it. Everyone I know has done it. You don't want to be that guy or that girl or whatever. So in that scenario, you want to cut your losses quick. We're going to wait for this 200-day EMA support bounce, at which point that's when the swing opportunity comes in. So now what contracts to look at? In our first bullish scenario that we talked about, we're going to discuss these two. We talked about having kind of a neutral open, support test, and then we wanted to see this hold right here, like 411 and change, and then a strong push up. Or, no, oh my God, roll that back. I'm sorry. I'm going backwards here. The first scenario we talked about was just a strong open, right? Support test, and then probably a test of 413 and change. That's our best case bullish scenario. This thing rips. This is awesome. In this case, when we see that breakout, I am probably liking, I would say, I would go probably 414 calls, give them 2 to 3 weeks expiration minimum. Do not do same day. Do not do zero DTE. Unless you've been trading for 10 years and you are maximally efficient, which means you're probably a better trader than me, I would not mess around with that. That is the quickest way to completely destroy your account. If you're new to options, please paper trade first. Paper trade, take our free trading education classes. You can sign up, create your account for free, pbalerts.com. Do that first. If you do that for 60 days, I would bet my life that you are going to start off making money a hell of a lot more quickly than had you just jumped into options. So if we get that strong move at open, we want to wait for the breakout and we want to buy on support test, right? That confirmation is going to be our move up. Because if we don't get that confirmation and move up, then we're going to cut back down, which means we're going to cut our losses quick. We shouldn't lose more than 5 to 6%, which means it's a loss on that trade. It is what it is. Move on. That's bullish scenario number one on a breakout at open. I think that is that's the best case scenario. It's a scenario I hope to see happen, but it's never a guarantee. And as I stated, we want to wait, watch this breakout. When it comes down for that little support test, right? So after it breaks up, should come back down, little support test, little consolidation in the short term. You want to have it on the 15-minute chart, right? So you want to see a push up. Let's find a day that's similar to this. I don't see one I really like. But yeah, I can't really isolate it based on those. But nevertheless, 15-minute chart. Want to see a nice push up, see a candle or two on consolidation closing above that 412.35 or so, give or take a couple cents. Once you see that, I think that's opportunity to go short-term calls, meaning 2 weeks minimum. I would say 4 weeks is a pretty decent bet. If you give them about a month of expiration, you'll take a nice 20% move up, cash out, wash, rinse, repeat. That's like a strong bullish scenario. Bullish scenario number 2. So you're prepared. We get kind of a neutral open. We test, reject, and come down. Okay. We're looking for support here. We talked about 411.50 or so, and then 411.30. We could see a support bounce to either of these levels. Intraday support holds. Then what happens? Neutral open, push up, rejection, support holds. We test again. I don't like the buy here. So we talked about it for a second, but I retract that. I don't like this as an opportunity to buy. I don't think that's it. I think it's a no man's land. It's the middle of nowhere. It's contrary to the disciplines that I have set in place to keep myself from losing money. And hopefully the disciplines that I impart upon you so that you do the same. I'm not going to buy there. I don't think that's the opportunity. We're going to test resistance again. Second opportunity for a breakout buy. If we get it, again, same thing. It breaks up, test support. That's the opportunity to buy, and we'll be swinging, aiming for 414 and change. We've got a pretty decent runway to resistance here, guys. Again, this is the daily chart. This is our longer-term roadmap here. Very important to know this. We were neutral, and then we closed bullish still. Now, however, we are just below where I'd like us to be, if I'm being completely honest with you. I would have liked to have seen it close right about here. I can't say it was priced like 412 and change. I would have liked to have seen it close above that line. We didn't get it, but as long as we break above that line, I think we're in pretty good shape. Because if you look at the price action from some previous sessions, guys, this is pretty interesting. We go back to we gotta shrink it. Shrank. If we go back to what we saw on the SPY back in August of 2022, again, we're just looking at areas of price, right? That's why we established these horizontal ranges so that we know how the price likes to play in that area. We saw a very strong momentum over 413, pushing as high as 426. $430 is the price to beat. Long-term bull SPY needs to be over 430. So keep that in mind. But it's very impressive to me that price moved very quickly through this area. We talk about that all the time. Price velocity is important. When we break over 430, the SPY loves to break down and break up quickly, which means we could see a break out to the upside that would explode and turn those swing calls into a lot of money. However, we do have a trending resistance hanging above our head. So this is our next hurdle. This resistance right here. You can see it right here. Let's make that red. This is our next hurdle. We need to break over this resistance right here. If you don't have this on your chart, screenshot it, mimic my chart so that you know exactly what to look at. This is our hurdle right here. When we break above this line, this is the opportunity that we have in front of us. 430. And then if we break 430, we may re-enter a phase of price discovery in which we could realistically see the SPY test new highs. This is the weekly chart. So we had that support bounce. We had this consolidation to the upside. We have to see strength here. Otherwise, this is dead cat bounce, and we're heading back down to 315 or so. So short term, we have two bullish scenarios we just detailed. Told you how to trade both of them. I told you the contracts, the strikes, and the dates I would look at for both. This video will be posted to YouTube so that you can rewind, rewatch, reduce, reuse, and recycle. Let's talk quickly, because we just took a lot of time on that. Let's talk bears. Who's a bear? Who's a bear here? Do we have any bears here? Do we have any bears in the house? Short term, who thinks this is madness? Where this is the bear party and the bulls don't belong here in the short term. Who here thinks that this is the bear's house right now and the bulls are just living in delusion land? Closet bear. That actually makes a ton of sense. I think it's just more cynic. Justin. 408. I wouldn't mind that either. The doctor. Bears for now. Okay. Da Bears. See how Justin Fields does this year. We should be at 300. Why? Why do you say this? Man, I'm out of coffee. Is everybody following along? Is this making sense? Is this helpful? Is this what you craved? I just want to know that this is what you're looking for in this stream to make you money. I'm here for you. If it's not what you want, all you got to do is say something and we adjust so that you guys are getting something out of it. That's the point of this. If you guys aren't getting some out of this, then there's no point doing it. So I want to make sure that's all I can do is ensure that we communicate back and forth, baby. We have open discussion, open dialogue. Here's something interesting to think about. I'm interested to hear you guys' thoughts. So, last year around this time, does everyone remember that everyone or most Americans received a fat check? Does everyone remember that? That's not happening this year. And forecasters are starting to build that into their expectations and financial models. What are they saying? Well, they're saying there's no way that this consumer forecast can be as strong because that 1,000, 2,000, whatever the amount was, isn't going to be, we're not getting that free money injected into the consumer's hand and thus injected into the economy anymore. So will that be the tipping point for recession? That's the real question. I'm not an economist. I don't pretend to be. I'm just a guy who enjoys patterns. And I will say that right now there is a looming fear in the market that recession is inevitable. Wall Street's acknowledged it. Institutions have acknowledged it. Major organizations acknowledged it. Even our government said, hey, yeah, probably. So when we talk about these bullish and bearish scenarios, keep that in mind. That any type of macro news, for those of you that remember the Trump pumps we traded, stuff like that can completely destabilize the analysis. The analysis is only good as long as we don't get some sort of unknown variable injected into the equation that just completely destroys everything we know. For example, what if you found out your spouse had a secret family? Would you look at them the same? No, it's a variable. Destabilizes your whole life. Even stuff that has nothing to do with it, it would stabilize your entire life. The stock market's no different. All it takes is a weird little odd piece of news to flutter around enough. And then enough people start speculating their friends. And then one person makes one weird trade that might be totally unrelated. But somehow major media comes in, slams it all together. And all of a sudden it's, oh my God, the house is on fire. So I'm going to share with you a lesson I learned from someone I consider to be very wise. What do you do when the house is burning? I'm interested to hear your answer. What do you do when the house is burning? The house is on fire. What do you do? What is the only solution in front of you? Anybody? The question is, what do you do when the house is on fire? Simple question. Straightforward question. Close, but no cigar. Seriously, there you go, Barb. You get out of the burning house. So what does that mean for us in the market? When they turn the market into a dumpster fire, what do? We don't run away, and there's no permanence to what I'm saying. But in these instances, I want to make something very clear. A lot of you have been with us a long time, so I want to make sure you guys hear this. There's never, if you're really invested in the market, there's never anything to miss. There's nothing to miss out on. It doesn't exist. There's always another trade. There's always another opportunity. There's always volatility. And I hope that's what you've seen us demonstrate year over year over year. We traded the COVID market. We traded the small cap boom. We traded all those COVID testing plays. And then we pivoted a little bit to like large cap and value. We crushed those. We traded tech, options, crypto. There's always a trade. You're never missing anything. That's like the number one thing I see with members. I just want to grab them, get them close so that they hear me. It's like, you're not missing anything. I mean, anyone in any context, you're not ever missing out. There's always an opportunity to make money. If it's not today, it's not today. When the house is on fire, sometimes you just have to get out of the burning house. If we map out this analysis and we've nailed it week in, week out, but say a macro event comes in and destabilizes and destroys it, right? And so like Steven said, buy puts. Yeah, but when stuff like that happens, when those variables occur, this is something it took me time and losing a lot of money to learn. When those variables occur in the market, when they're introduced into the equation, what does smart money do? Sit on their hands. If someone comes out with news that turns the market into a dumpster fire, the answer isn't always buy puts. Sometimes that makes sense. But let's say it's a quick overreaction to some news, right? And again, I'm talking about the scope of like the average 9 to 5 person is like, you're not sitting there staring at the screen, trading 0 DTE in 2 minutes. You're not scalping. I'm talking about your everyday trader, which is most of you. The answer isn't just puts or news comes out that just bumps the market. The answer isn't always calls. When variables are introduced into the equation, you take a step back so you can analyze those variables and determine what's the right course of action for me moving forward. If you are constantly reacting, and you could draw a parallel to your own life here if you want to get personal with it, with yourself. If you're always reacting, you're going to lose. It may not be some money. You lose control. You lose forethought. You lose insight. You lose everything. In my opinion, the building blocks that make life great, you lose all of those because you're no longer a person of intent. You're reactive. Let me ask you this. The money that moves us all, right? The money that controls the market, the powers that be, do you think they want you to be pragmatic and calculating and disciplined? Yes or no? Do you think that the powers that be want us as retail traders, nobodies, right, to be calculating and pragmatic and disciplined and execute? Hell no. They want you to be reactive. They want you to be reductive, like they want you to just destroy. And they want you to be political. That's it. There you go. You said it. Just making your donations to the market. I think the other day I saw like 320 million on bad premiums went. So some guy got stupid. Well, not one person, but a number of people got stupid rich off of retail traders buying bad options contracts that they couldn't sell because they were worthless. It doesn't have to be you. My goal in doing this with you guys week in, week out is giving you everything you need to ensure that it's not you, because it doesn't have to be, nor is it ever. So if you follow this, if you let this be your, your guidepost, your Bible to trading, whatever you want to call it, you will find success. But you only find that success, and this applies to life too. I mean, in the 7 years I've been, well, not 7 years, but 6 years and change I've been sober, it's like I've learned that being reactive doesn't help me anywhere. It doesn't help me with my wife. It doesn't help me with my kids. It doesn't help me with trading. It doesn't help me in business. It doesn't help me with anything. So your assignment, for those of you here, sit down and take a look at and find an example in which you felt that you were reactive this past week. I don't even care if it's about trading. I want to hear about it. Message me, DM me. If you want to talk about it, you don't have to, but if you want to talk about it, let's talk about it, because I guarantee you that it's affected your trades. I guarantee you that it's lost you money. There's no way it hasn't. There's no way to detach me from me as a trader. I'd just say I'm me. I'm me. I carry those same imperfections, inadequacies, tendencies into trading that I carry into personal relationships, into business, in all these areas. I bring it with me. It's like my big bag of rocks, and it's heavy as hell. So the question is, Am I willing to sit down and look at what those rocks are and make sure that I'm not bringing them with me when I'm trading? That's the important part. So again, news can destroy everything we talked about today. If that happens, hands off the controls, man. We need to watch how that pans out. There's nothing to miss. You're not going to miss anything. There's nothing to miss out on. If they come in and destroy the market, we've got this analysis. We've got those two options trades lined up, lock loaded. They make sense. They're technically sound. They will make us money. But if macro news comes in, destroys the market, the answer isn't always buy puts. It's watch and wait, because a bigger opportunity, I guarantee, is sitting there lurking in the midst. And while all the dummies are out there just throwing cash reactive, we are going to sit. We're going to, like a sniper in a perch, we're going to find that opportunity and we are going to execute it. And we're going to take the 3, 4, 500% return over a little piddly 5% scalp. Now, again, if you're a scalper, it's not aimed towards you because that's what you do. I'm talking about most of you that are 9 to 5 longer term traders that want to sit and just actively trade within the context of their current life. I hope you guys heard that, because it's something I wish I said more. Sometimes the answer is do absolutely nothing and just wait. Waiting 1 week's not going to make a difference. We are going to be doing this year in, year out. We're going to, like, I will literally be on here with gray hair all over my face, hopefully with all of you, talking about the same stuff, but hopefully in a place where all of you have gotten to the point where you're basically, you know, as much as I know, and it's just kicking ideas back and forth. Everybody's making money hand over fist. At that point, maybe we are moving the market. That would be pretty fun. But let's get to Barb's question. Do you think the SPY is best index trader market is right now? That's actually a really good question. So what I was going to, there you go, Snowflake, put it on, tattoo it to your face. Become an island boy and tattoo it to your face. I think that would be a phenomenal idea. You've already got the beard. Huh? Face tat on the forehead wouldn't look so bad. Just saying. So, Barb, the interesting thing right now is, like, SPY in my head kind of has become QQQ. I mean, it's just so tech heavy that it's kind of like, I think they run in parallel. Now, I like where the SPY is from a long bullish bias much more than I like small cap index. I think small cap index in the long term have a hell of a lot more opportunity. I've been very focused on this weekly chart here. We're at a pretty critical point right now. We've seen some price compression, which is great. 169 to 187. That's a tight range. RSI also compressing. However, we got that 9-day tripping below the 14-day. So we're losing momentum. Sellers are coming in. Price is compressing, but I don't know if it's going to head in the right direction. We got this double top here where we got a harsh rejection, which is really problematic because small caps have taken an absolute beating. And my fear here on this is that we're going to re-enter basically downside price discovery, where we're probably going to end up settling, in my opinion, right at the top of this range. I don't think it's possible. That I think just so much liquidity and so much buying occurred during the movement through COVID that I think it pretty much, in my opinion, probably solidified this range, right? From 90, like, I don't think we're going to see 90 anytime soon. 90 to 160, I think they pretty much cleaned up that range and built a pretty strong foundation of price. So where I don't foresee, in any foreseeable future, I would just be shocked if we couldn't hold that area. Jeremy, this is currently done on the Webull desktop app. So now, longer term outlook, and this is the monthly chart, which, like, especially for someone like yourself, Barb, who wants to trade maybe more sizable options positions over the long term, I think this is one where there is some opportunity shaping up for a longer term build into a position. However, with how expensive money's becoming, it makes small caps look very unattractive. That's the problem. Is, like, the chart looks great, but fundamentally they're just, it's so, in my head, it's so conflicting, you guys, because, like, small caps are attractive in price. However, from a macro standpoint, looking at the economics of it, money is becoming so expensive, and innovation typically halts when money becomes more expensive. So basically less is going to go in, less will funnel in, that will further, so less money funnels in, less innovation is is occurring, right? So I'm trying to think how to say this with all these words. Less money comes in, which severely dampens innovation. What are small caps trading on? The potential of innovation. So if money is decreased, money flow decreases, innovation comes down here, right? We level set and we focus more on stability. Then that means that price expectation based on innovation, I think, is going to fall in correlation to the level of innovation. That's probably confusing, but it's the best I could explain it. Less money goes into small caps. They're not able to innovate. Buyers are less attracted to the potential of what if they do it, which is what drives price with those. So they have a much shorter ceiling than they once did until money becomes cheaper again, until liquidity comes back into that market because interest rates go down. And market pressures and market fears, because remember too, small caps are always beaten to death, like the stepchild. When the redhead stepchild, when money becomes more expensive and there's fear in the market, where does everybody go? I mean, treasuries, indexes, or they pull out and go into other vehicles. But that's kind of my overall thesis. I'm writing one up now. I'll be happy to share with you in the next month or two when I kind of finish. I want to see how this plays out. But I've been kind of putting together a strategy for small caps specifically to I would like to invest pretty heavily into small cap because I think that they've gotten beaten down so much in price that it makes sense to buy now. But when you think about it from an economic perspective, it also doesn't because money's becoming more expensive. Innovation is going to decline. That's what I meant to say. Innovation will decline, and thus expectations as a result of that innovation will also decline, which means that buyers are not going to be as excited, which means price is not going to inflate nearly as much. Remember, they're trading on future potential. And when there's less innovation, it means there's less future potential, so there's less for it to trade on. So I think that one's kind of like a sit, wait, and watch for right now. I would keep an eye on that monthly chart. Like I'm really just looking for strong trend bounce here, and then some news that kind of backs up that foundation. That kind of, I guess, supports the idea that there might be cheaper money coming in the market. But looking at the Qs, I would say that the Qs are a better bet right now than the SPY as far as simple, straightforward trade. I think that we have some upside forming here on the Qs that's it's just a little more straightforward of a chart right now, especially looking at this monthly, which is what I've been focused on. Look at this. This is insanity. So billion five shares, right? Buyers really came in force here and picked up this level right here and really just wanted to push it back up and get it out of that demand zone quickly. Now, sellers just remain neutral here, but on such weak volume, we're at the end of April and clearly, liquidity is down substantially this month. So unless the next week comes in with just massive money, we're not going to see anything here. I do like Q to the upside. I like 360. I think that there's potential here as long as we stay above here to get a little more granular for you. I think this support bounce, as long as this holds and we can hold 315 or so, I think 342 is number one, and then 360 would be number two as far as targets. That'll be a swing position that we build into. I haven't put anything out because I want to make sure that we can hold this 315 area first. As you can see in the past, we've pushed up 330s or so and come back down and test. I'd love to see the same thing. I'd love to see we test 330, come back down, buy off 315, and we aim for 340 and then 360 respectively, which means we can build a pretty decent long-term swing position that'll have a pretty well-balanced risk-reward profile and offer a fantastic return. Let me just draw this here because I just have a suspicion. Yeah, so that's it. Basically, I think we're going to trend up against this resistance right here. So resistance functioned as support. So this is kind of our pivot point for bull bear, but I think there's bull upside for the short term. If it doesn't hold, then I think we're definitely going to go back 260, 250. Yeah, we're going to go through those updates real quick. So shop, look at this beauty. Look at this. Let's just zoom in here. Let's all take a moment and just enjoy the beauty that this. Oh, we're going to all take a moment here, moment of togetherness to enjoy this Shopify chart. Mm. Mm-mm, mm-mm-mm. Look at that. Beautiful. Long-term trend support, we're on the weekly chart, right? So long-term trend support holding here. This has been the perfect trade for us, just slowly, steadily climbing that ladder. We have to stay above this trend line. As long as we do, trade is still active. Everything is good. Money is being made. Everybody's happy. We have long equities from 30, and we also have the options trade that I have live. I think we had the 50 and the 60 calls, leaps 1 year out. Those have already gone up on this run up. They've gone up. They've doubled to 100% plus. You had 2 opportunities to sell. If you're still holding, I scaled out of some. I still have, I think, a third or so. I'd have to look. I haven't opened my Robinhood in God knows how long. But I still have about a third or half, I would say, at most of the position because I still see upside. We're waiting for this test of this 200-day here. I think look at in the past how quickly we moved through this range from 46 back up to 59. That to me is a no-brainer right here. This is what we identified. So again, we were looking at this back in, what was it, December, guys? And we were taking a little journey back in time to April, May of last year, or of 2020, excuse me, on the COVID boom. Now, again, artificially inflated as a result of free money into the market. But what it tells us is that this is a spring point to extreme, wonderful, volatile upward price action. This provides the single greatest opportunity for us to see a quick move up in very little time, confirmed by the fact that it sold off equally as quickly through that same range, which means we have like this wonderful liquidity zone here. It's like a super fast slide at the water park where the price can just escalate and de-escalate quickly. Keep in mind, it can go up just as quick as it can go down. So what we need to be very, very mindful of, very, very, very mindful of, is that this can come down as quickly as it goes up. So we're watching for this test of 63. I think long-term targets have already been hit of 55 plus, but I think 63 is not out of the equation. Again, past high here before we saw sell-off and then back up. We need to hold this trend support. I'm going to continue to hedge those options. Again, remember, we're just creating a vertical debit spread when we hit the highs, and then we're buying it back when we hit support. That's all we're doing. If you have any questions, please get a hold of me, guys. Yeah, Steven, 100%. I'm with you. Quantitative easing, free money. It was COVID. Everybody funneled money into everything. However, I do believe Shopify is like the best positioned e-com to just, I mean, they've blown up. I mean, everything about it is attractive. Their sales integrations, the current integration of AI that I know they're working on right now is what excites me the most, because I think that they can almost become have their own internal customer support that sellers can leverage, which, like, to me is incredibly interesting. And I think that their sales process is just phenomenal. They've upsold me a few times. It's impressive. But they're integrated into everything. I think they're the tried and true and trusted name. They're the Amazon of ecom small business, if you will. And everybody's got a brand now. Everybody's got an audience now. So I don't see any reason in which they don't continue to see a boom as smaller outfits really take the cake or get acquired by larger players. So that's that on Shopify. Dave, QQQ was alerted from the swing. Oh, right on. Well, oh my God. Well, he crushed that. So there you go, Lee. Looks like we're in the same boat. There you go. If you're not in the Discord, you need to be in there. You would have had the alert at 265. It's already up almost, $50 a share. So you made over 10% on a relatively safe long-term swing. There we go, baby. That's Mr. Slip for you. Oh, he even alerted 359 long term. That a boy. It's the English in him. Mr. English, the Englishman. You heard it here first. I'll drop the link in here for any of you that aren't in. Just if you wanted to get into the Discord, here you go. Tons of free alerts, trading education. Take advantage. It's free. We just want you to learn, live, love, and laugh, guys. Live, laugh, love together. So last but not least, we're going to go through our Palantir trade that we've been discussing week in, week out. Once again, it's following right along with the analysis, giving us exactly as expected, a little bit of move up on weak volume and then retesting support. The close was slightly below the 8-day EMA, which I'm not particularly concerned about, but it's also not great. On the daily chart, we're not looking as well. I think we're going to come back down. Probably, if we can hold here, this would be phenomenal. This is where I'd like to see strength come in. Right about $8, $7.90. I'd love to see some consolidation here and have this hold. Again, we were trading this beautiful inverted head and shoulders here, which means that we could be hitting our springboard point here, right here, as we pushed up to 10, 15 or so. We absolutely slayed that neckline, which means that we have strong bullish momentum to the upside should this hold. We are playing with the 200-day EMA here. That is our point of difficulty. Once we break above that, once again, we are continuing to swing to $10.30. And then further beyond that, our long-term play here, we've got those leap options, right, to make some money now and later, because those are over a year out. We are going to be trading this up to ideally $21 price target, low end, upside 26.86. So this is the range that traded in. We have this wonderful little liquidity drag in here that I think we're going to absolutely crush on the way to the upside. We had a ton of volume coming in down here. This is, in my opinion, no brainer, personal opinion. I think, great cash, great tech, great execs, great relationships. There's just no way this should be priced at $7-8. I just don't see it. It doesn't make any sense. It doesn't make any sense to me at all. I think that this is one of the better opportunities to build a long-term position in tech that can pay substantially, even though it's trading right now at about $8. It still puts it at a forward P of about 30, which is a bit high. However, I do think quarter-over-quarter performance is very interesting. Insiders have been slowly delevering into institutions. As far as I've been following, I'd like to see a little more institutional interest. Short float, I think, pushed to about 8 or 9%. So if that continues to grow, there might be a short story there that we can capitalize on. But I'd have to look it up again. I was just researching this one. I believe that their expected earnings growth was like 70% over the next 5 years, which is phenomenal. Really phenomenal. Good reentry price. Honestly, if you stopped out, God, that sucks, dude. That's the thing I hate about options. When you don't have a ton of liquidity, you can get those little stop bumps that just screw you, and it sucks. I would say realistically, wait to see if we test $8. I think that would be another opportunity to jump in that. We need that support to hold. That's a great entry because there's an easy cutoff point, right? Like we don't hold 8. We don't hold between $7.85 and $8. Then we're not going to see continuation. We're going to see, again, like we saw back here, some harsh sell pressure back down to 7. But I don't see that being likely because look at how strong buyers were here. Buyers said absolutely hell no, no way, undervalued. I want it. I crave it. I desire it. And they took it and they bought it. And we've seen buyers step in incrementally over time. If we go back to like the monthly chart, buyers, look at how strong buyers were. Again, guys, the point here is that we look at long term because we want to build larger positions that are going to grow 2, 3, 4. You know what I'm about. I'm about that 2, 3, 4, 500% runner over a year. I love those. Those are my favorite. I tie up a substantially larger, not a ton, but instead of doing a 3% in a position, I'm putting 7 of them, right? Into a larger, more stable, long-term position that also doesn't cause me as much stress. And this one is a prime example of what kind of opportunity lies. I mean, look at this on the monthly chart. Look at that. Look at that interest right here. Buyers love it at $8. So what that tells us is that we're undervalued here, and from a technical perspective, we have upside. We're going to go through NVIDIA and PayPal, and then we're going to wrap up. I owe you guys a small cap pick. I'll post that in the Discord for you this week. So this is NVIDIA. Look at this monthly chart. Unbelievable. Huge strength. This is one of my best trades over the last couple months. I'm very proud that we took this trade. We were talking about this right around here, 160, 150. We came back down as low as 108 back in October, and then we started loading into this position, right, for the breakout back to the upside. This position was up from my entry, which was high, if I'm being honest. I was still up 432% at the most. My second and third buys were at like $5 and $7 per contract. Those entries are up 1,000%, literally. Phenomenal trade. I'm really glad a lot of you capitalized. Look at that buying strength coming in here. They're just so well positioned. They've built their cloud business so well, in my opinion. They are the best position to capitalize on all cloud infrastructure because I just relationships, know-how, name, branding, technology, executives, they're on top of it. And I think that where Amazon has not really answered questions of how they're going to they're in this like weird optimization phase with all of their cloud infrastructure business. I think NVIDIA has been able to provide more answers than Amazon. as far as the who, what, the when, where, why, and how. While Amazon's continually optimizing, I think inevitably they can build something much bigger. But as Azure and Microsoft grows Azure, same thing. But I think NVIDIA was just quicker to market and quicker to answer those hard questions and provide those core services to these large businesses that they took the market share. Doesn't mean they're going to keep it, but I think that they've crushed it. We've got a beautiful cup and handle here. We want to see a little bit of a retracement here. I'd like to see it come down to 245, at which point I'm a buyer again, strong buyer. And then I would like to see inevitably a new phase of price discovery, maybe 350, 360. I'd love to see it. Tesla we can do very quick because and if you haven't looked at Tesla, this was our option number one. We consolidate, we test the 200, we move up, or we come back down, we consolidate, and then we rediscover price at like 100 to 150. I would say on the downside. Amy wrote a wonderful bear thesis on this. You can get that in the Discord. I really suggest going in options chat and DM me or go in options chat actually and just ask for it. Someone will happily repost it. Oh, Demetrius, welcome back, baby. You never got an email back. Well, what in the hell? I'm gonna follow up on that right after the stream. I owe you one, my friend. Make sure you send it to that email that I just typed in there, buddy. I'll send a message right now to ensure that somebody gets to it. Nikki, if you're on this stream, can you check that? Let me ask her. Demetrius. Also, if you're in the Discord, my friend, feel free to create a support ticket. Just click that support channel and then tell them exactly what happened, and they'll get it squared away. I'm really sorry about that. I'm outraged. I hate when people don't answer me, and I can't stand that they didn't answer you. So I'm going to follow up and make sure that you get the answer you're looking for, and you get all set up for your trial, my friend. Oh, one of my favorites has arrived. Hello, Miss Penguin. How are you? Tesla, read Amy's bear thesis. I think that there's just too much downside here. We had strong seller push here. Bearish divergence here. So RSI oversold, new low, price, new low relative to past low, which means we're probably going to come down and fill this gap to 135 or 125. I think that there's still pretty significant downside here based on the chart, unless some other news comes in that completely takes over. I mean, buyers really tried right here. They tried and failed. If you look at 331, strong volume, couldn't break that 200-day, couldn't trade above, and they sold off. So again, earnings are usually favorable. In the past, we've always had a nice little earnings. We've had a nice little bump in Tesla after earnings. So if it's going to happen, it's going to happen right now. And this is like the most insane entry for a long-term position on Tesla that you're going to get. It's possible. I've been exploring some long-term options for this entry exactly as it is right now, because I think that this is a pretty low. Wow. Now that I'm talking about it, I'm really selling myself on it. Because over 157, we cut below this low, right? So that would be a really simple trade. I like that a lot, actually, for a long-term options position. Yeah, we just cut below 160.56 or so. So $5 loss for a huge reward. But we don't have a new low. That would be still risky. It could be a great trade, but it's still risky because, again, this RSI is really tripping me out. New low is not good. It means that we could continue or it's the end. But you don't want to trade a reversal with a lot of money. You want to wait for confirmation and take the smart trade. So that's it. And last but not least, PayPal. We still, again, are consolidating. I think the new news of the new Fed system is going to make this a little dicey. Again, we had our entry at 69. It ran to about 88. Take your profit. If you're still in, you're still up, you're still green, set your stops. If that news continues to linger, this is going to see downside, and PayPal will be a bad idea. And you need to keep that in mind and remember that if you're holding any kind of long-term position, because it's something that I've been a little fearful of in the last couple of weeks as they've released more news on this new Fed Treasury system that's going to be the new integrated digital currency payment provider for everyone. It really, really makes things complicated for PayPal, in my opinion, unless they full roll into a bank that utilizes the service and continue to have that front-facing customer interface that they won't lose a lot of business on. So hope that answers your question. Casey, I hope that answered your question with PLTR with what we talked about. My voice is completely gone. So I love y'all. Stay blessed. Sammy Sosa. I love you.